Okay, welcome everybody to our first EquiAgent event. We're very excited to have some great lenders from across the nation here. My name's Allison Trimble. My partner, Blake Westhoff, there is in as one of the panelists. I'm going to be kind of trying to stay on top of the technical stuff today in case we have any issues, and Blake is going to ask the questions. So we are super excited. We have Katie Betcher from Montana. She's with Security National, Cindy Fraioli here in Seattle, Washington with Cross Country Mortgage, and Brandy Smith with Rural First from Lexington, Kentucky. And I'm just going to ask you guys to go around, introduce yourselves, just a quick bio, and we'll start with you, Katie.
Awesome. My name is Katie Betcher. I'm with Security National Mortgage. I have been in the industry. This will be my 13th year this year. I would kind of describe our company as being a hybrid. It's one of the reasons why I'm with this company is because of the fact that we can do so much. I have a background, of course, in horses, so I rodeo, I team rope, I barrel race. I have grew up with horses since I was 3. I curse my mother for that. But being involved in like ag properties is something I've kind of done since the very beginning, just because that's my background. But just being able to be diverse in this area is very important for me. So.
Awesome. Thanks, Katie.
Yeah.
Cindy, tell us a little bit about yourself.
Yeah. Hi, my name's Cindy Fraioli, and I've been in the business 26 years. I'm old. And I have been into horses since I was 3. I started in 4-H, did some EquiAgent stuff. And then I've been in reining for the past several years with my husband. So definitely a horsey girl. And yeah, being at Cross Country Mortgage, I mean, one of the reasons that I moved over here 5 years ago was because of all of the products that we have. So we have a lot of flexibility with equestrian type products, and it's been super fun to be able to do. And yeah, it's a little bit about me.
Awesome. Thanks, Cindy. Brandy, why don't you introduce yourself? Tell us a little about you.
So I'm Brandy Smith, and I'm a loan officer with Rural First, which is the consumer division of Farm Credit Mid-America. So I'm in Lexington, Kentucky, and I have been a lender for a total of 9 years now, but I've been a horse person since I was 5, 6 years old. And my background's a little different. So I've got experience with thoroughbreds, being here in Lexington, you can imagine. But thoroughbreds, I've dabbled in hunter jumper. I have also done some cutting lessons, and I've done a little bit of reining. Team pinning seems to be my newest found passion. That's something that I've really enjoyed. And then probably my priority thing within the horse world would be my Welsh Mountain ponies. So if you've heard of pony finals that takes place here at the Kentucky Horse Park, there's Welsh ponies that are involved in that, but I primarily drive my Section A's. So got a little bit of a diverse, and but again, my priority has been the Welsh Mountain ponies.
Awesome. Well, we will jump right into it. Just for our attendees that are there should be down at the bottom a place where there's Q&A, and I think you can ask questions and we can see it as we're going along. So even if we have kind of a slate of questions or things that we've queued up, but we'll have some time at the end to ask questions, or maybe even bump some questions in now that we're down a panelist. So in between. So if you have those, ask them. I'll make sure that we get them in front of everybody. So next, Blake's going to kind of move into, we have some preset questions. I think the way we're going to do it is we're just going to kind of like ask one of you to start. And kind of the way that questions go is like the first person who talks about it's going to have quite a bit to say probably, and then you can add on to that or edit it depending on how you feel. And we'll just kind of move around to start the questions with somebody different each time. So I'll let Blake take over from here.
Awesome. Thank you, Allison. And thanks to all of our panelists for coming today. Super appreciate it. So we'll just kind of kick off. I mean, as realtors, we're kind of always looking for the next best thing in lending and trying to keep our eyes always looking forward on what's coming down the line. So Katie, they'll start with you. Are there any like specialized loan programs that you want to talk about or highlight for equestrian properties? You know, anything that's on the horizon coming down the line that you want agents to know about?
For us specifically, I wouldn't say there's anything specialized per se. One of the things here in Montana, and I know everywhere is different, is really trying to vet the property, because not always do you have to use a ag program to get these places financed. It really depends on the borrower and the property. So for me specifically, I think our ag program is great, and I can't wait to hear about Brandy's too, just so that I can learn. But ours, we go 20% down, and we also have a hobby farm, and we have like an actual ag program to where if we need to use income off of the property for the borrowers to qualify, we can do that. There's just, what's great is I can take a package and I can be like, okay, this is what the borrower is, this is what the property is, let's bring it together, will you take it? And I like that kind of stuff. That's the creativity I like. So it's not just like black and white for me. It's, I can piece it together and I can make it work, and I can find somebody who will take it. So that's, I hope that answers the question kind of.
Yeah, absolutely. Does anybody else have anything to add to that?
I just had a question. Do you go by Katie or Caitlin?
Katie.
Katie, what is your like loan amount range? What are you guys?
The hobby farm goes up to 5 million, and then you have to go into the actual ag product after that.
Okay.
Mm-hmm.
So did you want us to just go around and each talk kind of
Yeah,
about?
totally. If you, do you have, like, Cindy, do you have anything?
Yeah.
Yeah.
Yeah, so one of the things that Cross Country Mortgage has done in the last couple of years is they have brought on a suite of specialized mortgage products. And I'm really excited about it because I used to live in Santa Barbara, California for 8 years, and I did a lot of horse properties there. And so I got my feet wet there. And of course, it's a different type of animal, right, than just a standard residential. And so basically with us, what's cool is for anything that's like considered a hobby farm, which is technically, I think, 50 acres or less, we have a lot of flexibility. So for instance, if you've got maybe a trainer that wants to buy a farm, or you've got a self-employed person that is not able to verify their income in a traditional way, like with W-2s, tax returns, and that type of thing, we have a bank statement program, several of them actually, where we can average bank statements over 12 months or 24 months to help them qualify. And then we also have P&L programs, 1099 programs, where we can just strictly use that to help the buyer qualify. So a lot of flexibility there. It can be either zoned agriculture or residential. And then depending on which program I have, we can do exceptions too. And we've been doing about 40% of the exceptions that I put through. So just lots of flexibility on those types of properties.
Can you use income for qualifying? Do you have any? Yes.
Yeah, with a couple of them. And I want to say my LTV is capped at that 75, so they have to put 25% down.
Okay.
Yeah.
Great.
So yeah, great for those even investors. Like we've got a DSCR loan too that we're just rolling out for investors, where we can do like a non-occupying co-borrower too. And so we're excited about that one because that's going to provide, more flexibility too in terms of like documenting income and that type of thing. So yeah, I would say just what's exciting about the way I think lending is going now is that, after the 2008 financial housing crisis, right, the pendulum really swung the other way.
Yes, and got really tight.
Yeah. And now we're starting to see more just kind of make sense underwriting, just like, does it make sense for you to lend to this borrower? And so that's super exciting. So we're kind of getting more into specialty products in general, not just with horse properties. But I really do think that that's the way lending is going. Cross Country Mortgage is number 3 now in retail lending in the nation. And about 40% of our volume is specialty products.
That's great. Well, and it's awesome to see like that trending in a more like common sense
We've been waiting for.
way. Yeah, totally. Right. Because a lot of it's, you know, you're just run into so many roadblocks
Yeah.
and you're like, this makes sense. How does somebody not want to finance on it? And it's some like weird caveat overlay that somebody has
Yeah.
that prevents it from financing when it's a better, you know, it's a good sound investment. So
Yeah.
that's great. Brandy, do you have anything to add?
Yeah, I can chime in. So as I mentioned in the intro, I work for Rural First, which is the consumer division of Farm Credit Mid-America. And so we focus strictly on acreage or those rural properties, Rural First, right? So I don't have any specialty programs such as FHA or anything else. We do strictly conventional loans, and the more acreage, the better. So we have a range from, you know, the hobby farmer that, you know, maybe they have one pony for their kids and they want 3 acres, right? Or maybe you have that trainer or, you know, somebody that boards or breeds, you know, whatever the purpose is. Between Rural First and Farm Credit, we would have a wide variety of options in that case. To give an idea, we do require 15% down in most cases. And that's primarily on the consumer side, but there are 15% down payment availability on the commercial side as well. So I'm not a commercial lender, so but I do have access to that, and I have commercial lenders that work in my office. So we often bounce, you know, customers between the two of us to see what fits the best.
Mhm. That's great.
I have a question.
Yeah.
Would you guys be open to me asking Brandy some questions because she is specifically rural? And maybe that might open up and Cindy can chime in because we know the lender side, and then like people can start asking questions about this. Does that make sense?
Yeah, totally.
Okay. Hey,
I'm
Brandy. Okay. So on your guys' rural product, when it comes to the hobby farm, can you use a percentage of like the appraisal? You're going to get an ag appraisal. Are you going to do a percentage of the income off of it? Because you can't, it's only like a certain amount, so normally like 30%.
So are you talking in terms of like projecting income or?
Yep, exactly.
So on the consumer side, we do not. However,
Okay.
the commercial side, they are able to do that.
What makes it a commercial versus a residential?
It depends on the customer's purpose. So
Okay.
like sometimes I'll get a referral from an agent. I call the customer and I get to talking to them and diving into more detail. And they say, you know, hey, I want to, you know, maybe I want to board a couple of horses, but their income does not rely on that boarding income. That would be more residential versus you have somebody that strictly, you know, maybe Susie is buying a farm and she has a trainer that's coming to live on the property. That would turn it into more commercial. And therefore we could look at projecting some of that income from that trainer and board, you know. I had one specific scenario. They did have a trainer coming to live on the property. So the owner was going to get, you know, a percentage of the training. They were going to get board. They were putting in an indoor arena, you know, the whole shebang for that to be. And that was definitely commercial.
Okay.
And a
Okay.
lot of times it's not so black and white. Sometimes there's a lot of gray area in there as well. And so that just comes into play of how my relationship with our financial loan officers, I have a really good relationship with them. So we bounce ideas off of each other all the time and see what product would fit the best.
Gotcha. Okay. That makes sense.
Hopefully that answers your question.
No, it does 100%. I'm just, when it comes to like these ranches that we do, especially, are you guys licensed in Montana?
We are not.
Okay, yeah.
So our footprint, I will say our footprint would be Kentucky, Indiana, Tennessee, and Ohio. And then we have partner states across the US too.
Okay.
And I can provide that map as a resource as well.
Okay. It's just sometimes, and just trying to brainstorm here with all of you guys, it is sometimes hard to find properties. So like, for instance, when you're looking at Wyoming, you're looking at log homes. That's a completely different animal. Lenders don't like them, so you literally take your box that went this big and you're down to here, and then you add in the acreage. So we're looking at 80+ acres. It just starts to get really complex. It narrows down our investors. So it's just, I love to find other lenders that do rural properties like this. So that's super cool.
I'm
Well, I
gonna
think
jump in here real quick, Blake. We've got a question from Bill that says, I've got a listing on almost 5 acres in a horsey neighborhood with a kennel and existing pet resort business. My potential buyer is from the UK with an E2 visa, so they can't do an SBA. Do you have any programs for them? They want to do a package of 3 properties.
You cut out right there, Allison.
Oh,
You
shoot.
said a potential buyer from the UK that has a what?
With an E2
An
visa,
E2 visa. Okay.
so they can't do SBA. Do you have any programs? They want to do a package of 3 properties.
I'd have to look at it. I'd have to know a little bit more about them. Like, is their income here in the US? Is it in the UK? Like, are they, you know what I mean?
Mhm.
Bill, do you want to pop in there?
Okay, here we go. Yeah, so they have businesses here. They're based in Florida. And then they also have a wedding venue business in the UK. And they would take ownership either through that company that has the wedding venues, or they would set up a specific LLC in the States for this property. Well, these 3 properties. Total, probably looking about 3 million on all of them. One is to make it even more fun. One is a commercial building, and they've already bought the business. And then the other 2 are residential properties with kennel buildings. Like mine's got a house, a guest house, and then a 5,000 square foot kennel. Luckily, all of those are block buildings with new or newer roofs and windows, because we're in Florida. That's a thing with hurricanes. Yeah, so it's been challenging.
Bill, I'd like to chime in. So for the you're not gonna be able to do a package program or like deal here, but for that one with the 5,000 square foot kennel, you're gonna do a residential commercial product. And it requires 25% down. So you can take like for instance, in Jackson Hole, Wyoming, they have a lot of these. They do a lot of Airbnbs up top, and then they have like or like a home if they want to live in it, and then they have the business underneath. That's what you're gonna do for that property. That's how you get it done. It's like you can do 20 to 25% down on it. And Cindy and Brandy, chime in if you guys have something different, but I do a lot of them in Wyoming.
Okay. Because even with them being non-citizens,
yeah,
I mean, they've got a
because
social
it's a
security, they've got a
DSCR. It's a DSCR product is what it is. And so there you take, and Cindy mentioned this earlier, you take income from the property, you don't use any of their income. So the property qualifies for the loan.
Okay, so would income be the primary driver for qualification on that? Or
No,
also,
the
okay.
property does.
So the property, if the property can support the value as is, even like as a residential.
That's
Okay.
exactly what you do. So you don't use any of their income.
Okay,
Yeah, they're great loans.
thank you.
Have a new DSCR that's a commercial, and that'd probably be a good way to go there. Is the property in Florida?
It is. It's in Sarasota, so we're on the Gulf Coast. It's
Okay.
not in the flood zone. It's not in the hurricane evacuation zone. It has had some updates. Now, these folks bought it to sort of semi-retire from the UK. Now they want to retire back to the UK, so they have not been running it. Really, it's sort of like just a high-performing business. So I think there's a lot of upside. So it's really not the business income that would support the value on this. It's the property.
Yeah, that's what I would do, Bill.
Thank you. I appreciate that. That's the best news I've had in weeks.
Yeah. Yep, got to get creative.
Okay, Blake, I'll kick it
Awesome.
back to
This
you.
is great. Yeah, totally.
No, we've got more questions.
I love I love the collaboration and everybody, being able to chime in. That's awesome. So part of it, like as real estate agents, we have a really small like snippet on kind of what exposure we get to buyers. It's only the conversations we're having with the limited number of people that come to us directly. But you guys as lenders have a lot more touch on all of these different buyers with different lenders that are also having different conversations with buyers. So are there any like trends that you're seeing among equestrian buyers or rural buyers, maybe this year that you haven't seen? Or like, I know a lot of us have listings that are sitting on the market that aren't necessarily selling. We're getting showings but no offers. I mean, what's the conversation like with your buyers right now? Or like what's their, how are people feeling, I guess, from your guys' perspective?
I can
And
chime in
start with
here.
anybody.
I can chime in here. I actually, I was just thinking about this last week. I have had a lot of people that have been boarding. So this comes into play because we just had pony finals in Lexington here in August. So if you're not familiar with pony finals, it's a very big show for the youth. There's 40 plus ponies in the classes. It's very, very competitive. And so I actually had a lot of conversations with parents that have been boarding their ponies with the trainer or boarding them somewhere else. And now they're kind of moving towards trying to find that personal property. Even if it's 5 acres or 10 acres, they are moving towards moving out of the city, moving to the country, finding that rural property to keep their personal pony home and then hauling into the trainer. So that was actually a very common theme that seemed to happen in August. I found that pretty interesting.
Yeah. It's so interesting how stuff like that, like, you all of a sudden a conversation that you haven't been having, all of a sudden you're having with 5 different clients or something. And
It was very repetitive.
something
Yeah.
to that.
Yeah.
That's cool.
Katie or Cindy, do you have anything?
Go ahead, Katie.
Oh, I was gonna ask a question to Brandy on that. So are you bringing up boarding, like as in people potentially bringing in income for boarding, or is it just they're looking to board their horses, like they want to buy a property so they don't have to board?
Yeah. So in those cases, it was the parents, because these are kids, they're 18 and under, I think, and their parents are actually looking to buy their own property to keep the ponies there at their own personal property.
Okay.
Yeah,
So do
because
you
like
guys,
their current situation was the ponies kept with the trainer or vice versa. And I think too, there's been a lot of discussion, mainly because I'm in the pony world, right? And so there's been a lot of discussion about today's youth getting further and further away from being like the barn rats that, that we've always been called. Like I was a barn rat when I was little. And it seems like some kids are, they're jumping from pony to pony, but they're not riding those tough ponies or they're not doing a lot of the chores at home. And so it seems like a lot of the parents are trying to shift away from that, which I appreciate. I really appreciate that. Technology has taken over in this day and time. And it's just, I don't always, well, to put it this way, is like rural first are our, I've done lost my train of thought there, but we like to say we're trying to get closer to what matters. And so that made me think of those conversations with the parents. They're trying to get their kids closer to what matters. I hope that makes sense.
Yeah, no, absolutely. Yeah. I guess for Cindy, did I interrupt you?
No, you're good. Always.
Okay. I wouldn't say, honestly, I just feel like this is just a hard market. It really is, where we have high purchase prices, we have high rates, properties are harder. What I see is, I have really hard loans. And when I say really hard loans, I have really hard loans. I have the people that are like, I make $100,000 a year. I want to buy a $3 million property. I want to get income off of it. I want to rent out the bottom part of my house, but I also want to have my horses. I want to run, 200 head of cattle on here. I just get the weirdest stuff. So that's what I think I have the hardest time with is I don't even know if there's even an investor out there that does anything like that. And I'm sure that's why we're having these conversations, is because this is what's there, because people are trying to get income off of these properties. But in our world, lenders don't like that. They want security. So that's why, and this is kind of going farther into some of the questions that you guys are going to ask, is I know Brandy doesn't do these types of loans, and I'm not singling you out, Brandy. I'm sorry. It's just when you have a rural property that could potentially be taken conventional or ag, it really depends on the borrower. And that's why when you guys have these properties, you need to have a relationship with the lender and be like, this is what I got. What can you do to help me set this up for success? And that's the whole point of, I think, of this, is setting you guys up as real estate agents for success, to give people options depending on what they're looking at doing. Because for every property, there's 15 different buyers, and you guys just want to make it work.
Right.
Yeah, I think that, totally agree with all of that. We're seeing that same thing. And I think that in a market like this that is harder, this is where like we're seeing more of the non-traditional ways of getting people qualified be really just important products to have, because it's complicated right now. I feel like all the borrowers are way more complex than they used to be. And so for us, this is, I think the most important thing too is that as a realtor, just if you can get your lender involved sooner than later, right? In my area, a lot of realtors have a tendency to, especially if they know me really well, they'll call and be like, yeah, we need to make an offer tomorrow. And I'm like, well, we need to figure out, like, can this go residential? Is it going to be more ag? Like, what are we doing? So I just think the more information about the property that you can give the lender as soon as possible, so that we can get the buyer profile going and see which way to go is it's king right now.
Totally. So like on that, I mean, what's the best way for real estate agents, or like when we're going to either list a property or we're going to, like, we're meeting this new buyer, what's the best way to like package both of those things up so that we're delivering, like, what's the key information that you need to know maybe about like a property or about the buyer's profile? Like, are there any like standout things or things that you're like, I wish I would have known this sooner about this client, or I wish I would have known this about this situation?
Yeah, good question. I mean, I think that if you, as a listing agent, if you can vet out ahead of time how this property can be financed, of course, and I know you guys know this, but that's always the best, right? Like, get with your lender, and really determine, like, okay, how can this be financed? And then it's going to be a matter of the buyer profile when they come in. But I think things like how it's zoned, all of the outbuildings on the property, everything about the well, is there a shared road agreement? Is there, you know what I mean? Just as much detail as possible. Because what I do is I'll take the property and forward it over to my team that does these products and really start vetting the property out, right? To see like what we're up against, which investor of ours is gonna take this. And actually all of ours are done in-house too. And so that's where those exceptions come in, but they can really look at a property and go, do we want to finance this? Like, how can, what's the best way to go? So I don't know if that answers your question.
Yeah.
I kind of have a question. I'm going to jump in because when Blake and I were talking about this question in the beginning, I think what we were kind of thinking is like, right now we have a lot of listings, which is not abnormal, but obviously time on the market's extended. I don't think we see as many buyers like window shopping. And in most places now they require buyer's representation agreements. I don't think we're seeing as many just kind of looky-loos at things. So you have sellers that maybe have a plan and something they want to get doing and also don't, want to reduce their prices as quickly as maybe we would like them to. And so maybe what would be helpful is to know, you probably hear more from buyers even than we do, because there's less buyers in the market, like what they're thinking when they're looking at a property that they do qualify for, that they, could make happen, but they aren't. And it's not just, you know, what are buyers saying? What's the conversation like with you guys?
Income.
I'll jump into that. I mean, it really varies in this area, right? It just, a lot of it is, how knowledgeable the realtor is about horse properties. That's what I see. Like for you guys, you get it, you're in horses, you understand how this works, but a lot of realtors, especially in our area, don't really.
Right.
So,
Absolutely.
you know, and I think that makes a big difference in just, you know, educating the buyers, right? Based on your knowledge, right? So if you're in horses, you understand how it works, obviously you're gonna have better information from your buyer. So that's what I see on my end as a lender, is I see a lot of realtors that just don't have that background or that experience. And so the buyer comes in kind of, and we're having to educate them, right?
Right. And then, right. And there's just kind of a lack of confidence on the buyer side when they don't have an agent giving really good, like, sound advice on how to move forward on something.
Yeah.
And
Yeah.
I'll put my thoughts in there. So, you know, us as lenders, we are, you know, by nature, I ask a lot of questions, right? And I feel like there's some agents out there that don't ask those questions. You know, so if they know that somebody is maybe moving from out of state and they're going to start a boarding facility, you know, have they asked those right questions to know what kind of horses they're going to try to board? Have they, you know, even the age group, are they going to have a trainer with children? Are they going to have a trainer that focuses on adults? And that kind of helps drive, you know, what territory they need to be looking into, what facilities they can live with and without, you know, that kind of conversation. But it seems like a lot of customers that I get, they just haven't been asked those questions. And us as lenders, again, we understand that, because me by nature, I'm nosy, right? I like to ask questions, especially if it's involving horse properties or people that have farming backgrounds, anything like that. I just naturally ask questions, and that seems to help a lot, right? Just asking the right questions rather.
Yeah.
And that kind of brings up another point too. This has been a really common theme, going back to the question, would be people moving in from out of state. So something that agents can do ahead of time is trying to figure out what their income sources are going to be. You know, if you have somebody moving in from Texas to Kentucky and they're not going to be turning this into a residential, or even if they are, right? How are they going to get that income? How are they going to advertise and market themselves if they're going to offer boarding? Or, you know, if they have a W-2 job, how are they finding that job? Are they transferring, you know, from one location to another? That's always a really important question that tends to get missed a lot of times. Not calling out agents for that, right? That's where I come in. Like I pick that up too, but it would be really good for agents to ask that ahead of time, and that will kind of give you red flags. Like, you know, maybe this person hasn't thought of that.
Totally. Well, and it's really always surprising to me, like, as a, you know, a listing agent, we'll have a horse property on the market, a buyer or buyer's agent calls and it's like, hey, you know, I've got somebody interested in your property, you know, kind of wanting to show it or whatever, and you ask, oh, what type of horses do they ride, or what type, you know, what's the discipline, and they have no idea, you know. So how are you shopping for a horse property for a client you have no idea? Like, you just know they ride horses. So I think, yeah, that just goes into it, like knowing your client really well and having a good idea of what they're looking for, what's going to work, what type of facility they need.
Yeah.
Asking all those questions.
Allison, kind of to piggyback on, I think what you were asking was, what conversations are we having, right? What you want to know in the eyes and the mind of a buyer.
How are they
what-
making decisions once
Right.
they do maybe know there's
Right.
3 properties that they like? How are
Yeah.
they making? Because I have noticed with relationships with lenders over the years, they sometimes talk a lot more freely because maybe they're a little bit more conservative with us about like their finances and things, but they've already sent you their tax return. So now you're in a even, you know, maybe a different relationship. And so I'd be curious sometimes, or maybe they're not wanting to offend people, but they might be more
Right.
open with you.
Yeah. Honestly, when it comes to these properties that, like the ones that you've sent me, it's all about income. It's how are they going to make this work? Because you're looking at $10,000-$20,000 a month, right? At some of these properties. So they want to know how they can live in this property, but they can make income off of it. And that's why I was a little late getting on. I was at a property out here, and one of the things that she did is she did this app and QR code. And so on all these listings, because part of the problem I think you guys might have, and you can tell me to shut up if you think I'm wrong, is that you guys know everything about this property. You can't vet the buyer's agent. You can't tell, you know what I mean?
Hmm.
So like, you're trying to sell this property for them. And one of the things that she did is she made a
Like a website for
Yeah.
Like
Yes.
a frequently asked questions, more information about it that isn't just the
but
MLS
she has like a
listing.
video, because this property is like, it's unreal. So the house is gorgeous, it sells itself, right? But we're talking about there's a stream down there, there's a stream. So in Montana, water's a big deal. I know water's a big deal everywhere, but
Oh, we're going through an adjudication in Washington.
yeah, so water's a big deal. And so there's a stream down at the bottom. If you want to, I was thinking, because this property's on a cistern. So what would it take to get a well pumped from where the stream is? And it may not be potable, whatever. These are just all my thoughts. But she puts all of this in here, in this website, everything about this property. And the reason I thought that was a great idea is because then you guys don't have to worry about this buyer's agent being a dipshit. Just saying it. I'm just going to say it. And so then you guys can kind of give all of this information to the buyer
directly to the consumer, right?
Because there's just like, my mind was blown when I'm at this property. I'm just like, I'm sitting here trying to think of 6 ways to Sunday to finance this place. And I'm like, okay.
So I guess I'm curious though, to specifically like, say we do all that stuff and we get all the information, we've gotten boots on the ground, people already been there. And so maybe they have questions, maybe they don't. But like, I pretty often see people making decisions over things that are like $50 a month different in their payment, right? So like, I'm so curious sometimes how buyers are making those decisions when the place is good, maybe the rates aren't quite perfect. But a lot of times when you're talking about debt to income, usually people have more available. They either have more available than they're qualifying for really, or they have less and they look really good on paper. So it's kind of, I'm always interested when people make the decision to write an offer, and specifically ones where there's financing, you know, what they're looking at or how they make that decision. I know it's different.
Yeah, that's a different type of buyer though, Allison. Like you're talking about like the buyers that are $50 a month. You're talking about like a $400,000 or $500,000 purchase price. We're talking, we're talking like large acreages. When I don't personally, and you guys may see something different, but the buyers that I have that are looking at these large acreage properties, it is genuinely if I'm running 200-300 head of cattle, whatever it is, do I have water? It is a huge deal. It's almost like they'll take the payment just so that they don't have to pack water in.
Right. Which is definitely a different kind of buyer. So like in our area, and we've got people tuning in from everywhere. And so like Cindy, like in our area, we have a real mix, lots of 5-acre parcels with mixed uses on them or things like that might be $750. So maybe it is $100 and not $50, but that's a big part of our marketplace also. And now anymore, like our entry level homes are $750, and that is quite a bit of our sales. I'm always curious because right now in this particular market, which is really unique, some things are selling really quickly. Some things are taking 90 to 120 days, which in 2019 was totally normal. So we're coming off of this period of time where things moved really quickly, and like your sellers are kind of used to that, even though that hasn't been the case for maybe 3 years. They still feel like it. So, I mean, that's a lot of like, even in the last couple of days, having sellers that are feeling really anxious and trying to, kind of like force things to happen. And I guess I'm just curious if you're hearing different conversations now than you have in the past.
Yeah, I mean, I can
Insurance
talk that a
is a
minute. I
big
mean,
one,
I
too.
will say that the buyers that we're seeing right now, and this includes equestrian and non-equestrian, right? There is less rate talk than there was 6 months ago. Like, people are getting to the point now where they're like, we just gotta do something. And so we are seeing that, but I do think that people are really cautious right now. They, there's more options even on the horsey side of things. And they're just kind of, I would say there's not a huge sense of urgency. You know what I mean? They're just kind
We're
of,
feeling that on the listing side for
yeah,
sure.
yeah, yeah, I know you are. So I don't know, I'd say that's interesting. So still a mixed bag for sure.
Totally. Yeah, it's so hard to know, you know, a lot of times because like we kind of go cyclically too. Like there's often times where we have a ton of sellers and then we don't have a bunch of buyers at the same time, and then we'll have a bunch of buyers and not a lot of listings. So you just are limited, you know, I think in the kind of conversations that you're having and the like amount of exposure. And then you guys are, you know, primarily dealing a lot with buyers and having a lot of those conversations. So it's just interesting. I know for us, we often get the horse trainers and like professionals that are trying to buy a horse property. Maybe they have a horse rescue. Maybe they have something that's like, you know, they're really passionate. They're really dedicated. Maybe they've been in the business, but like we often see them not have the W-2s or like not have the income, not have the tax returns to qualify for these properties. You know, what kind of advice, and because that's like we get so many of those inquiries, and then you know they don't have a big down payment oftentimes. I mean, they're just like trying to make this dream come alive, and they are always coming to us. And so what kind of like what advice would you have for them? Cindy, we can start with you since you're out.
Yeah, I think, again, just getting us involved really soon into the process. And, again, the products that we're seeing right now are a lot of bank statement programs, 1099s, profit and loss, instead of more the traditional way of showing income. We're seeing that a lot right now. And so, I just have the conversation with the buyer, get a feel for what their income is, where their income sources are. And then determine which way we're gonna go in terms of how to document that.
Mm-hmm.
Yeah. So, but it's definitely, I mean, it's a real big thing right now,
Yeah. Definitely. We just get so many of those inquiries, and then we're, you know, trying to problem solve
Yeah.
and figure out strategies, and it's some are easier than others for sure.
Yeah. And what's cool about me meeting you guys too, is if there's something we can't do or vice versa, like, we have other resources, which is awesome.
Mm-hmm.
Because if you've got a good lender, they're gonna be upfront with that, right? They're not gonna be trying to push a rock up a hill and do something that's really out of.
Squeeze somebody into some program that isn't
Yeah.
gonna work for them.
Yeah.
Yeah, and I think it comes down to educating the buyers on their debt to income ratios a lot of times, because when I ask people what their, I will ask them what is their income as a general question just to see what the response is. And it kind of tells me, how educated they are. Are they going to tell me what their W-2 is, or are they just going to generalize it and they don't really have a specific idea of what it is? And so just educating them, and you as agents can even do this, educating them on what their debt to income ratios are, what they need to look like, how to calculate those. And that's where, Cindy said getting us involved earlier, the better, because we can help calculate those. Right.
Mm-hmm.
And it may be a no for now and it can be a yes later if we can kind of help them understand and then work with their CPAs or, whatever the
like
thought
we do
is.
a lot of that too, especially like when you're approaching tax season and people are getting ready to file, is we're like, hey, maybe you should talk to a lender before we do that, so that people can strategize. I mean, there's lots of things that you can move around, so that you might look better on paper, and those tax returns can actually get you qualified for something.
Yeah, I would definitely say coming towards the end of the year, getting us involved with your taxes so we can go 1-year tax returns
Mm-hmm.
for our self-employed borrowers. That's
Right, because that's a lot of people is
Yeah.
that self-employed. I mean, and even transparently, people that are not necessarily working in the horse industry, but a lot of people are business owners and have some sort of whatever it is, but that are self-employed, that also own horses and are buying facilities and doing stuff.
Yeah.
So it kind of goes, I think, over a number of different groups.
Yeah.
And
for
it's
sure.
actually surprising how many people do not keep profit and loss records. You know, if I will ask somebody for a profit and loss, they're like, oh, well, I don't keep that. I do that at the end of the year. You know, it would be really helpful to keep on track of that at least monthly, you know, so that holds more credibility.
I'll work
Think
on
about
that for myself.
I can speak to myself about that too, right? We can all work on that. We can all work on it. But it just speaks to more credibility for you as the borrower. And
Yeah.
you know, if you don't know what your profit and loss is, if you don't know how you're doing throughout the year, it's
Right.
just
How are
kind
you
of, to me,
expecting
it's like you're just going into it blind, you know? Some people get lucky, but I'm not lucky. So
You're like, I have to
no.
do a little more planning on my
yeah,
end.
yeah.
I
That
love
brings
it.
up a good point too. I think with self-employed borrowers, a lot of times they, more often than not, I see they think they make more than they actually get.
Right. Right. Then when they actually go through the numbers,
Yeah.
they're realizing,
Yeah.
yeah, absolutely.
They're thinking of their gross here, and they're not, you know, seeing what else is on their tax returns and what they're taking off and everything.
Right. What they're actually walking away with.
Yeah.
So we're kind of getting towards the end. I do want to say, we've had this conversation about Fannie Mae and Freddie Mac going public, and there's kind of a lot of conversation about what the impacts of that could potentially be. So I kind of want to see from your perspective. I mean, do you think what's the potential of that actually happening? What do you think that's going to happen? What do you think the impacts are going to be on lending? Is that going to have an impact on, down payment requirements, rates, underwriting flexibility? I mean, is there any projections or insights that you guys have? I'm just always curious what other people have to say and what they've been hearing.
I personally, it's not, this is my opinion. I don't think it's gonna be a down payment. It's gonna get rid of our LLPAs. So the thing is Trump's pissed at Powell, right? That's why this all came to fruition, is because he's pissed at Trump, or he's pissed at Powell. What he wants to lower interest rates. Powell says no, so Trump is going to find his loophole. He always does. This is, and so the way he's doing is he wants to take Fannie Mae and Freddie Mac and he wants to take them public. It's going to have their own board of directors. And there's pros and cons to that, right? So it was public prior to 08. It's the reason why we got into kind of the predicament that we were in. And so now with the board of directors that they have, they're hired. They're hired by the government. And so it's going to make rates go down.
Okay.
It will, which is positive. It's a good thing. Like that's the whole point here, right? We have purchase prices that aren't budging, right? They are what they are. You can't tell somebody that, your orange used to be $1, but now I'm selling it for $5. They're not going to go down in price because they've gotten $5 for it. It's the same thing with real estate. So we need interest rates to go down because it's really hard for buyers to qualify and to afford these payments, and so I think it's positive, but then I want to knock on wood or whatever, because it scares me to go back to what it was, because humans.
Well, that's where you got all that subprime lending and.
Yeah, humans are greedy, and it wasn't. Yes, there's the subprime lending, but what it was is them being ran. They're moving it to where it makes everything more lackadaisical, and so it's just like that is something that can absolutely happen.
Be problematic. Yeah.
Yes. And so that's why I'm like, I don't know if I should talk about it, because I just, I know enough to be dangerous.
Part of the reason, right? But that's part of the reason we want to have this conversation, is like, what's happening, what the impacts could be.
Yeah.
Because it feels like it's been the last couple of years, everybody's been like, oh, rates are going to come down, rates are going to come down, rates are going to come down, and they haven't. And then now it feels like we're getting kind of close, and we haven't seen a big shift in price, like you said. I mean, price points have really held strong in this. And so then, it feels like we're on the cusp of something, I guess. And so I'm just kind of
100%. Like something's got to give here.
Yeah, absolutely. Cindy, you were gonna say something?
Oh, I was just gonna say, yeah, I mean, they've been under this conservatorship through the government since '08. They need to come off that and be more privatized, go public or what have you. I tend to agree with Katie. I think it's gonna hopefully get rid of some of the LLPAs, which is the loan level price adjustments that, it's an impact to the client. I also think what's even bigger than that is going to affect interest rates. And I'm like, fingers crossed, because we're hearing it's like in the works right now. But Trump is trying to do some deregulation with the banks. And one of the things that they're talking about doing is allowing banks to buy more treasuries. And that would be huge for pricing. I mean, we're hearing it could be 100 to 150 basis points improvement in pricing if that happens.
Wow.
And so I think in the short term, that could even have a bigger impact than Danny said. So we'll see. I mean, it's kind of a wait and see.
I
Right?
know that's the hard part, is it just feels like it feels like a carrot dangling a little bit on like all these things coming down the line.
We're rolling into Jobs Week here. Do we think we're going to see some of this in the short term coming out, or when are you guys talking about, or what is the word?
I mean, the Fed is, hopefully they're going to lower in September, but to be honest, the last couple of times they did that, we actually saw a bump in mortgage rates.
Right.
There's different things going on now. I do think inflation, they're starting to figure out that the tariffs are having a more temporary effect on inflation. Reports are coming in, at expectations. But yeah, rates are trending down. They have been. And hopefully they'll just continue, but it will be interesting to see on the jobs front, because that's going to really play into this. If unemployment goes up, then I think that's going to help mortgage rates. So, yeah.
Right.
Same.
I love it. Awesome. Do you guys have anything else to add, or anything you want to wrap up? We have a couple minutes left. I kind of wanted to open it up for questions if any attendees have any questions, but do you guys have any final thoughts, words, anything you want to leave us with as we wrap up?
I didn't have anything to input on the Fannie and Freddie stuff because I do straight conventional loans, right? So I really don't, obviously I would be impacted by interest rates, but I thought both of the ladies explained that really well. So.
Awesome.
Yeah. This is great. So glad you guys are doing this. I mean, the more communication we can have with realtors and and talk about things like this, I think the better for the whole industry,
Absolutely. I mean, it really helps us to know how to navigate or what's coming down the line, because like I said, we just have such a limited amount of conversations with, or like exposure. So it's good to bring people from all over the country and see what are similarities and what's different from what you're hearing.
Maybe this is a good time to ask if any of the attendees there would like to ask any questions. You can raise your hand, or I can make it where you can talk or put something in the question and answer. I think this was really helpful. So I know Blake and I were talking too, and other times when interest rates were lower, we were talking with our lenders all the time, right? Like everybody was financing everything. So I felt really a lot more in tune with what was happening. And then now we have a lot of listings, and we have buyers, and we definitely represent buyers, but a lot of times more now they're coming to us already pre-approved. So maybe we aren't as often sending out to lenders as we have been. So maybe we felt a little less informed. And people I think it's been a really, everybody's feeling a little worn after, at least we are, after this year in the market. So it's very helpful.
And it's like Cindy was saying, I mean, I think everybody mentioned it, but how complicated all of these deals are right now. Like all the buyer profiles on the deals are really complicated. There's just a lot of hurdles to get through on all of it. So it's just a challenge, and I think everybody's feeling that from all sides. So it'd be nice to get a little reprieve.
Can I ask a question to you, Blake and Allison? Do you guys have a lot of fallout on your listings?
Like things that don't come to closing?
Yeah,
Not really. I mean, by the
That's
time
good.
we get through, I mean, unless it's something that's, insurmountable with the property or something, we're pretty good at problem solving those things. So as long as we have a willing buyer and a willing seller, we usually get to closing. So no, we haven't had a lot of that. We
Good.
have had a couple of weird backouts for like 2 buyers got in a fight the night before closing and lost their earnest money. I mean, we've had some weird stuff like that this year, but nothing that was like because the financing fell apart. We've
That's
had appraisals coming in fine, I think, and stuff too.
We've had some sellers that have gotten, I think, just have felt the market really, as stuff was shifting, and it was shifting really quickly. I think especially at the beginning of the year, where we'd predict, hey, I think this house is going to sell at this price point, it's going to move quickly, and then for whatever reason that didn't happen. And then we've had other listings that we've kind of prepared the seller like, hey, I think this is going to take 60, 90, 120 days, and then those have sold really quickly. And so it's been really hard to like set our sellers' expectations for what the market's going to do and what their house is going to do. And so I think we've had a couple of those like sellers who have felt, they thought their property was going to, I think all of them had unrealistic expectations for their like listing price and things like that. But we've had a couple of those that, when they didn't get the price they wanted, they were really firm on that. Their orange was worth $5. They're not going to take $4 now. And
or
they just
$4.95 even. Like,
no, $4.95. Yeah, totally. So they just haven't like budged on any of that, and they've really stayed. We've had some really stubborn sellers, I would say, that like have been like, I'm taking it off the market because I'm not going to take anything less. And we've had 2 showings, and we're telling them, the market's telling us it's not worth what we have it listed at, and they don't want to hear it. So
or really specific properties that just are going to take the right buyer, that are going to take time, which we get a lot of really unique stuff, and we do really enjoy that. But this has been a harder, because I do think it has impacted, having to do buyer's representation agreements, at least for us in Washington, started, I don't know, last year. And across the nation, I do think that made a difference. We don't see as many showings. So not only are people not getting offers, they're not getting showings because, and we represent a lot more of both sides now because they can come to us, we can show the property. We've always done a lot of that, but I think we're seeing even more now. I mean, our last 4 closings, probably we were both sides of the transaction. So I do have a question here from the audience, just if anybody's licensed in Oregon, which I do believe a couple of you are. Yep.
Yeah, I am.
And Brandy, I know that probably there's part of the Farm Credit system that you could refer to in that area also.
Yep.
Yeah. Anything else for the good of the order that anybody?
I thought that was great.
Yeah.
Like, I know it can be a lot. I think that's why we push so much to get us involved, just because there's just so many ways you can do a lot of these properties, especially like the ones that you guys have there that could potentially be hobby farm, could be conventional, there are multiple ways to finance them. It really just kind of depends on the borrower.
totally. Well, no, what I always say to my clients too, like buyers, is I'm like, your lender is more important than your real estate agent in all of this, because without the money and without the financing, it can't happen. And so having somebody that's really proactive, a good problem solver, can see stuff like coming down the line before it's even an issue, like is insurmountable to like getting something closed. I mean, I appreciate all of you guys being here and being a good resource for everybody.
One more question. Anybody licensed in Texas?
Yeah, we can work in all 50 states actually.
And we do have farm credit in Texas as well. So
yeah. Well, I think this is one of the things that we're hoping to do quite a fair bit more of with EquiAgent. I mean, Blake and I have been talking a lot since we decided to do this. It took us quite a few years to get this idea off the ground, but we did feel like there was a hole, across the United States of bringing together equestrian property specialists. So we had people that we had relationships with because either we referred there in other states or we show horses with them or some of that. But then say you have a client moving to Maryland, you have no idea. So the referral part of it was really important too. But the more we got into it, the more we realized that we needed some community, of lenders in different areas of, there really aren't any national statistics. There's not any data. Like there is really no way to search to find out what's been happening in the equestrian property sphere. And like all of us probably do quite a bit of like land and ranch or other things too. But equestrian properties are really unique. They're not totally farm and ranch. They may live in a residential mixture. You know, there's a lot of differences that are really specific to us. And through that process, we met a lot of people, and there are a bunch of other referral groups or things like that that we participate into. But our goal with EquiAgent is really to try to bring what's needed into the industry, to elevate the industry, to make sure we have, you know, people to ask, to bounce things off of. As we were sitting here talking, I was thinking, gosh, it would be so great to have something like this, even from the listing side, maybe even just some agents or things like that, talking about what they're seeing in their areas, because you get an opportunity to get some fresh ideas, or at least not to feel so alone. I mean, this, you know, when the market was really fast and crazy in 2020 and 2021, that came with its own set of unique problems and things that we had to try to solve. And then now this is completely different. So having a group of people that can come together really, you know, that isn't brokerage specific, that isn't, you know, anything specific except for that we, you know, sell equestrian properties. So that's kind of our goal in all this. So we can look forward to some more things like this coming. I was really excited to listen into this, and you guys did an awesome job. We really appreciate it. And we are going to try to figure out a way to have like lender affiliates and do some of that as we're coming into things. So you guys will be still coming along with us for the ride, and that'll be great. Is there anything else that anybody's got they want to pitch in? Otherwise, we'll let everybody get back to work.
Do you have like an idea of maybe if the group did have questions for their properties or buyers or whatever, would there be a way for us to answer those questions? Because I think all of us have a little bit something different to offer. Just trying to like help you guys, and like easy communication always seems to really help.
Yeah, I think one of the things that we would have, you know, we have within EquiAgent, we have, you know, a resource group and things that are kind of once people are designated and part of it, that they can come and participate in. And within that, we have a community section of it. And we're still kind of working on ways that we could bring in, like have basically affiliates. So people who are participating kind of know what the EquiAgent deal is about, but also be there for that, to get, you know, even to be able to reach out to when you have different properties or that kind of thing. So yes, that's definitely in the works. Turns out all of this is a lot hard. Does all the things you have to do something like this, even to try to get a webinar going, are not skill sets at all that you use in being a successful realtor. So we're definitely learning. Yeah, this was a really expensive project to even get off the ground, and then trying to be like, okay, now we're going to try to use all these different platforms and services and connect with other people. It's been a real, you know, just keep reminding ourselves we can do hard things. You know, it's challenging because you finally like get kind of confident in something, and we feel reasonably successful in the real estate field, and then you're like, and now I can't get my computer to turn on, or even just starting this bit. Apparently there's a way you can do it where it's practice mode first, and then you start it live, and then we're like, and we're already in, everybody's in. So it's been an interesting, technology is challenging, and then trying to make sure we get it all together. But yes, that is, we definitely want to have a way that we have kind of, not that they're approved, but people who are participating in the same kind of way to help make everything work together. And obviously we think you guys would be a great fit for that. So
well, thank you.
Anything else? We really appreciate it. Hope everybody has a great rest of the week, and Blake and I are off to a horse show tomorrow. So
well, have fun.
All right. Thank you, everybody. And thank you, everybody, for tuning in. And this will be available and recorded, so we'll have it for everybody to watch that couldn't make it.
Nice meeting you, Brandy.
All right.
Yes,
Thanks, guys.
great to meet you.
Thanks so much.
Bye.